right, let's keep probing this market, figure out what's under what rock. Phil Streible joins us to follow into this next 17 minutes. Phil, we're down pretty bad right now. Chief Market Strategist, Blue Line Futures, how are you?
I'm doing good, man. You know, something to note on what KG said about his friend being in remission. A lot of times when you think about that, bad days and things like that, the mental capital sometimes is a lot more valuable than the monetary capital in your wallet. You know, that's a
Amen.
great thing for him.
Love that.
So,
Like I
yeah.
said, good guy coming up too. I know you'd have something thoughtful to say. And we're usually on Fridays, Phil, so I get you early on a Thursday.
I know, I'm excited. So this market environment right now is really a trader's paradise. The volatility is ramped up across commodity markets really over the last few weeks, and it's given the shorter term trading opportunities on both sides of the market. So the dynamic of who's coming into the market, the participant, has changed a bit. You know, the markets, they become fixated on those three narratives: the tariff threats, the uncertainty about inflation, equity valuations. And the solution I have for people is to reduce, hedge, and diversify. Something else a lot of people are watching and a lot of chatter was they're watching the 200-day moving average on the cash index. Remember, moving averages, they all have a limited shelf life. It becomes, we're trading above it, we test it. Well, what happens when we break below it? And we see that old support, now new resistance. So we really have to see if the buying activity is able to overcome the selling pressure.
Man, that's exactly what happened to NVIDIA today, because I've had a line at 120 and 140 basically forever, two big volume trading areas, and that 120 was supposed to be support, and it literally turned into resistance within the last 24 hours.
Yeah, there was not a lot of bid on a lot of different markets. I mean, the U.S. equity markets, it goes from buy the dip to hope to get break even. So you really got to be choosing wisely when you're selecting what investments you're going after at the moment. I think of the Indiana Jones and the Holy Grail, where he's got to pick the cup out at the end, and you really got to be mindful of what you're going after.
You have chosen wisely.
Right.
The other one I like to think about for markets is from Raiders, when he's taking the stone out and replacing it with the bag of sand at the beginning. That's I feel like the market was trying to do some of that. I was trying to like take all our big tech leadership and swap in like staples, and come on, that's not going to work.
Well, I thought under the Trump administration that we'd see a broader rally rather than the Magnificent Seven going from this like tech heavy. I felt like other areas of the market would do better. So generally, when people ask me what index that they should look at, I generally tell them the S&P 500. But if you roll it back to commodities, what I focus on, I really think that there's three commodities to watch, and it's really gold. Obviously, central bank buying, it's a hedge against the tariffs. It's done well recently and against the higher inflation. Copper, obviously breaking out to the upside, the electrification, everything else. I think that the rebuilding effort that would happen in a Russia-Ukraine peace agreement, you'd see a lot of copper being utilized there. And I really like oil prices at multi-year lows. I think that OPEC, they do have to balance their budget, and it's very difficult for them to do it at these levels here, especially Saudi Arabia. And I think that Middle East tensions are the next kind of big narrative that are going to fire back up that no one's really talking about.
So then, does crude oil look worth a stab as a lot of the other commodities look firm? WTI just falling off the face of the chart.
I think so. I mean, Trump's done a great job on getting prices down. Just in mid-January, we're at like $77, $78. Now we're in the mid-60s here. I think that we've reached a new price band. OPEC has appeased them by saying that they would raise production. We can't raise production as fast as what you think. I don't think the economy is quite as bad as what it looks like on the surface. So I think that there is some demand there. But again, I think the Middle East tensions, they were already talking about some sanctions against Iran, maybe taking them off of SWIFT payment system, and they are really backing, Hamas and Houthis and things like that. And it seems like Israel is ramping up some of their efforts. So I just think the Middle East tensions could come back into play. And I think you have an easy stop out. That's one of the things that people need to look at when you're trading in these highly volatile markets. Take down your position size appropriately, and have hard stops in the market. And I think that's also the roll benefit on oil. The farther out you go, the cheaper it is at the moment. So you're going to get that where you need to constantly roll over. You can do so at a lower price.
I like that. Echoing some Alex Coffey said earlier today, too, about adjusting sizes, doing more frequency with smaller sizes or moving faster with smaller sizes can get you there. So crude oil may be one that kind of stands out as, I don't know, if you're feeling a little buy the dip commodity bullish action, maybe there's something in there.
Yeah.
Natty gas has been doing amazing.
That one I recently took a short position on with stops at 480. I think that we're going to go back down to about 420. I think a lot of these weather events are kind of behind us. We're not seeing those big, drawdowns on the injection numbers. I do like corn futures, 50% retracement from recent contract lows. The highs been a little bit tighter of a crop. I think that Trump recognizes that these farmers need to survive too with the exports. Wheat at a double bottom. Prices starting to come up on there. You had a couple countries say that they were having some problems with their wheat. So there's plenty of commodities out there. That's why we were saying, choose wisely and everything on it. Something to note on that average true range, 5-minute chart on the S&P 500. Just before I shut the computer down, it was moving about 15 points. So if you're trading a regular E-mini S&P, that's a 750-point move. 4 against you, whatever, basically every 5 minutes. So that's why we like those minis and micros. And I think the exchange has done well by providing those products.
Love me some micros. Love me some micros. The range, by the way, so far this year, we haven't had a 2% swing in the S&P, but we've had 11 or 12, including this one, according to Sam Stovall this morning, that were more than 1%. So we've got 10 minutes, I guess, to break that range. Love the chat, Phil. Thank you, sir.
Yeah, you take care, bud.
Have a great one.